Welcome to the channel. I'm the Swedish dividend investor. So today I want to talk about selling. But before we dive into that, it's time to talk about the sponsor of this video. You guys. Seriously. Thank you so much for the support lately. We are approaching 200 subscribers and a lot of that is thanks to you guys commenting and liking the videos. If you're new here, we talk about dividend stocks and ETFs and we do valuations. All with a sweet Swedish accent. So if that sounds like something you're into, hit subscribe, like the damn video and drop a comment. Alright. Sorry for the clickbaity thumbnail. I want to see if YouTube really likes drama and rewards it. So, I totally sold out. But just a whole position. To be honest, it pains my heart a little. The position I'm talking about is Philip Morris International. Since I've been quite busy as of lately, I only have a screenshot from my phone where I had to do my selling. So, 100% gain, and that is just appreciation. Dividends are not included. I started buying Philip Morris in 2021, and as you know, I love my SIN stocks. Now, PM is a lower yielder among its peers, like Altria and British American Tobacco. I think the yield was around 5.2 to 5.4% when I started buying. And from there on, I have just been holding, and occasionally buying when they have gone below $90. Before we break everything down, I realized I could replace my account number with a nickname for each account, so I don't have to blur them anymore, and that will save me a lot of time when editing. So, here on my broker, I filtered all the buying and selling of PM since the start. We can see I have bought PM for a total value of 28,077.07 Swedish crowns. And as the making of this video, $1 is 9.57 Swedish crowns. So the total buying price is $2,933.86. When I sold it for 56,021.51 Swedish crowns. I have also received 5,009.52 Swedish crowns in dividends. Adding it up, the total value is 61,031.03 Swedish crowns. So, we divide the total value with 9.57 to get the value in freedom units. We land at $6,377.32. So the profit was $3,443.46. Now, to calculate our return, we take the final value plus dividends received, subtract the initial investment, then we divide that number with the initial investment and we multiply with 100 to get the percentage gain or loss. In this case, we get 117.36%. That is pretty sweet for a boring company in a dying sector. You might scratch your head right now and wonder, why did you sell it? Overvaluation. See, my yield on cost was over 6%. And even when I started the position, it was over 5%, where I think it's decently priced. The yield right now is way lower than 3%. So adding more was out of the question. Plus the 28k Swedish crowns, roughly $2.9k dollars in gains, could net me somewhere around 1,800 to 2,200 Swedish crowns per year if I were to invest that in something yielding 6 to 8%. So another $190 to $230 per year in dividend income. Just take a look at the 5-year chart. Does that look normal or healthy? The blue dots with a K are where I was buying. So I believe PM is exuberantly priced for the moment. But in the future, I might be able to buy it again at a cheap price. So it's not like I don't believe in the company or that the fundamentals have deteriorated. It's simply about overvaluation. Now, I have been at this place before. And usually I just sell half of the position when I'm over 100%. So I get the invested capital back. But in those cases, I ended up selling everything just a while later. If they had been rising slowly, along with free cash flow, earnings and dividend yield to match the price, I wouldn't have sold. But the fact they started to run is a warning sign, and I figured the best thing to do is sell and let that capital work somewhere else. The risk I would take if I continued to hold is to the downside, erasing the gains. Could they have continued to climb? Of course. Is it likely they will do it based on nothing? I doubt it. Just to show you, here is a Gordon growth model. Now, I checked Seeking Alpha. PM's dividend growth for the last 10 years have been somewhere around 2.6 to 3.1%. Now, even if I'm generous, giving a 4% growth for the dividend, the price is almost half of what it is today. So what do I plan to do with my roughly $6.3k? I will add a bit to JEPG, Global X S&P 500 and Nasdaq 100 covered call ETFs to get a mixed yield of over 7%. Remember, I lose 6% yield from my initial investment in Philip Morris, but the added capital will potentially net us more than double the income going forward. So, I created a simple spreadsheet to calculate what I can get for my money. Hey, on this channel we are all about weaponized autism, right guys? To the left we can see the amount in dollars, then converted to euros, since these ETFs are priced in euro. Then we see the allocation. Here I can enter what percentage per allocation I want. Then that automatically gets calculated into euro amount per holding. In the middle we see the ETFs. We can see the dividend yield when converted to euros, since if I divide the higher dollar amount it would make the yield look higher. So I also converted it to euros and Swedish crowns. JEPG is sitting at almost 7% yield, QYLD at 12.28 and XYLD at 10.53%. Pretty awesome. This yield is variable since the premiums from the covered call ETFs are different each month. So what I did was this. I simply added the last 12 dividends together to get a 12-month trailing yield. Alright, to the right I have the grand total. Here we can see the total amount invested, yearly dividends for each currency, and at the bottom we can see the monthly income in each currency. So let's say I don't want to invest everything. Maybe I want to keep 20% as dry powder if the market tanks. Then I can simply put as an example 40-20-20 in the allocations and voila! I can see what my investment could give me. So a 9.19% yield, $462.94 in yearly income or $38.58 per month. Now, personally, I like to be heavily invested and only keep some money on the sidelines. So let's try this in the order of JEPG, QYLD and XYLD. 70, 15, 15. Look at that. Pretty sweet. 8.3% yield, $522.83 in yearly income or $43.57 per month. Remember, all of these ETFs are distributing monthly. So let's try to skew it for some higher yield. Let's go with 60-20-20. Now we get 8.74% yield, $550.70 in yearly income or $45.89 per month. We can try even higher. 50-25-25, 9.18% yield, $578.63 or $48.22 per month. Now, I will play around with this spreadsheet for a bit before I decide what I will do. Do any of you guys do something like this? I sometimes build model portfolios like this and I play around. Then again, this stuff is pretty autistic. I like to be transparent and honest about my portfolio. Some might say this move was stupid, like why sell a winner, right? My main goal with this portfolio is to increase my dividend income, not by any means, but through relatively safe investments and through the use of fair valuations. Sometimes stocks will run up, and you better have a plan for when that happens. If I were to hold PM and it crashed down to, let's say, $120, it would still be too expensive to buy more, but the gains would be too small to sell it. Now my capital can earn me even more income, and I would say the risk to the downside is more limited. All I'm trying to say is, know when to take profit. So what do you think about this move? Is it stupid? Do I have a galaxy brain? Let me know in the comments. If you enjoyed this video, show some love by smashing the like button. Hit subscribe and turn on notifications so you don't miss any updates. I'm the Swedish Dividend Investor, and I will see you in the next one. Stay smart, stay patient, and keep stacking those dividends. Ha det gött!